Hi there, welcome to Kneppy Invest. Every single year, we see numerous companies list on the ASX, which is a good thing because other companies that are listed on the ASX go bankrupt, they get taken over, or they decide they only have to list or need to list on the NASDAQ or something like that, and they delist from the ASX. So we usually see a lot of companies list on the ASX. I think in the record year, we might see over 250 companies list. Majority of companies want to list on the ASX when times are good, when the market is going up, which is makes sense. They want to, one of the reasons why they want to list on the ASX is easier access to capital. And capital becomes easier to access when the market is running hot. And of course, the converse is true. When the market is heading down, when the bears are in control, fewer companies want to list on the ASX. And in 2022, we haven't seen as many companies list on the ASX as we have seen in 2021, and particularly in the second half of 2020. And in the second half of 2020, we saw a myriad, a plethora of companies list on the ASX. And the company I'll be featuring in today's video was one of those companies, Duratec. This company listed in November 2020. And this is the first time I've taken a look at the company. And one of the reasons I haven't really taken a look at this company is because of the chart, because of the share price action. The share price of Duratec was in a downtrend up until recently, and we'll say 4 to 6 months ago. However, sentiment has shifted in this company from negative to positive. And when you look at the financial state of this company, I had to take a closer look at Duratec because we have seen impressive growth in revenue. This company is profitable. They're also generating cash in their business. And it seems based off a trading update, financial year 23 will be better than financial year 22. And that's exactly what I'm looking for an investable company, particularly for the long term. The first time I heard about Duratec, I went to their website, had a look at their prospectus, very quick look at their prospectus. And I just saw some photos and I thought at that point in time, this was a mining services company. And that's not exactly true. So I had a closer look at the website. I went to the About section. And if you want to know more about a company, just go to the About section and they should have a description about what the company does, the services they provide. Or you could just go to the prospectus or go to the annual report. Now, I like going to a prospectus of a company. And when a company goes through the IPO process, they have to have a prospectus because that prospectus is like an overview of a company, an overview of the sector, the risk involved in the company, an overview of the directors, the board, that sort of things. It's a myriad, I shouldn't say myriad, it's a trove of information. In fact, it's one of my favorite documents to go through when I'm researching a company, particularly a company that has recently IPO'd. So you get a good idea of what a company does. But I'm going to let the company speak for itself in describing what it does. And this is from their website, from their About section. Duratec Australia specializes in the protection and remediation of steel and concrete structures, and through the intelligent engineering of solutions, material selection, and quality installation, we deliver the best solution to extend the life of your assets, which is a pretty good description of what the company does. It should be a good description because this is the company's own description. Now, the company has three main divisions: engineering, construction, and remediation. So that engineering division is all about the diagnosis of asset condition and degradation, including cost-effective durability solutions. And in the construction division, if they realize the asset can't be saved, they are willing to design and construct services to replace structures that have reached that point where their serviceable life has come to an end. You would imagine what they do, and Duratec is all about extending the life of assets. And if the life of the asset can't be extended, they're willing to replace that asset. And you would think this company would be involved in a lot of industries and have a lot of clients, and they do. So this is taken straight from the company's prospectus from 2 years ago. They have a similar table in their annual report. So if you want an updated table, just go to the annual report. But the main thing I wanted to see is just the industries they're involved in and just a list of some of their clients. And the industries they're involved in include defense, commercial and residential buildings, natural resources, industrial and utilities, power, energy, ports, transport infrastructure, and water infrastructure. So you can just see from some of their words, they're involved in infrastructure, which makes sense because they're all about extending the life of assets, and a lot of assets are infrastructure. And when you look at some of their clients, a very impressive client list, including Department of Defense, Crown Perth, which might not be that impressive, WA Department of Finance, BHP, Rio Tinto, Fortescue, Newmont, Chevron, Pilbara Port Authority, Port of Melbourne, City of Kingston, Victoria, DM Roads, New South Wales Department of Industry, and Fulton Hogan. Now, they also have examples of some of the services they provide to their clients. I'm not going to go through all these. I'll just take one random from here. Let's have a look at the Department of Defense. Some of the services they have provided to the Department of Defense include heritage restoration, maintenance upgrade works to the Victorian Barracks, HMAS Stirling Wharf concrete repairs, bridge repairs, wharf extension, fender steelwork, HMAS Albatross building works, Garden Island electrical works, Campbell Barracks building works. So just go to their annual report and you'll see an updated, fairly similar updated table, which provides their clients, their industries they're involved in, and also some of their service examples. Now, a few facts in regards to Duratec. This is a fairly young company, founded in 2010. And over the past 12 years, this company has grown really nicely. We'll have a look at the revenue growth of this company over the last 5 years later in the video. Duratec listed on the ASX on the 4th of November 2020. So they just celebrated the 2-year anniversary on the ASX. And the managing director is also one of the co-founders, Phil Harcourt. And together with the other co-founders, Oates and DeProse, they all own each 10.9% of the company. So combined, the co-founders own 33% of Duratec. One of the largest shareholders, if not the largest shareholder, is Urtec Holdings with a 19.4% stake. It's going to be interesting to see if they increase that to 19.9%, because 19.9% is I've seen this a lot, where a company might own 19.9% of another company, or a fund might own 19.9% of a company, because 20% is a really important takeover threshold. I won't talk about that in this video, but 20% is a very important level. Current market cap of Duratec is $134 million. That's at a share price of 55 cents. And the ticker code for Duratec is, naturally enough, DUR. Now onto financial year 22 numbers for Duratec. And when we compare these numbers to financial year 21, there has been some really good growth for this company. And if we look at the trading update, which I'll have a look at later in the video, there is potential that financial year 23 numbers will blow financial year 22 numbers out of the water. Now, revenue grew from 236 million to 310 million. So one of the first things I look at is revenue growth. Is revenue growing? Particularly revenue per share. A company can grow the revenue just by making lots and lots of acquisitions. So I want to see revenue per share growth. Operating cash flow grew from 9.2 million to 24.7 million. That's a really nice growth in operating cash flow. And better yet, free cash flow went from being negative 800,000 to being positive $17.9 million. Profit grew from 7.1 million to 7.7 million. So less impressive growth when it comes to profit. And you'll notice a fairly big difference between operating cash flow and free cash flow to profit. And that's one little question I want to explore and will explore later in the video, particularly when you compare operating cash flow to profit. Last year, nowhere near as big a difference there. Now, even more interestingly for Duratec is the net cash. This company has very little debt, if any debt at all, but they have $46.1 million of cash, which means the enterprise value is less than $100 million. And enterprise value, in my opinion, is a true indication of the value of a company. So I would say Duratec's value right now is less than $100 million. And that might suggest there is some value for this company, because if you calculate some of the valuation metrics using just their market cap, you might have higher valuation metrics than you probably should get. But if you calculate valuation metrics using enterprise value, there is some intrigue there. There is some argument that this company is undervalued. And a good example of this is comparing the P ratio, which is 17.4, to the EV to operating cash flow, which is 3.4. A very big difference between those two numbers. I tend to focus on the enterprise value to operating cash flow to give me an idea of how this company is valued. And 3.4 for that valuation metric is really low. In fact, if I see a number less than 6, no matter the company, I think that is low and there might be some value for that company. Now onto the revenue and revenue growth for Duratec. And fortunately, when a company does IPO, they do provide the last or the previous 2 years of financial statements. So even though Duratec has only been a listed entity for 2 years, we actually have 5 years of history here. So revenue goes back to 2018, and from 2018 to 2022, revenue has grown from 126 million to 310 million. And based off that training update, it does look like revenue might be over $400 million in financial year 23. And that's really impressive growth for revenue. There was only 1 year where revenue did drop, financial year 21, but then it started going up. So when you do see a dip in revenue in just 1 year, that means nothing. Doesn't mean the trend has turned. And that's definitely true for Duratec. Revenue is in an uptrend. And that is one of the first things I look at whenever I start researching a company. Unfortunately, we only have 5 years of history here. Preferably, I would like at least 10 years of history to really know where the company has grown over that period of time. I've also included operating margins here. And this is really important because I would say and assume that Duratec has fairly low margins, and it has decreased. The operating margins have decreased over the past 2 years. From 2018 to 2020, Duratec had operating margins between 6.5 and 6.9%. That has now fallen to 2.2%. Now, this could be just a one-off, and maybe operating margins will go back up towards 6.5% again. And if it does, and this is a big if, but if it does, that would mean with revenue of, say, $400 million, which is what they expect in financial year 23, and if operating margins get back up to that levels we saw back in 2018 to 2020, that means profit would be, say, $25 million, significantly higher than what we saw in financial year 22. And if that happened, I think the market might freak itself out. I think the market will get really, really interested in this company. Now, onto the question why there's a big discrepancy or difference between profit and operating cash flow. I should also mention, when I calculate operating cash flow, I take away lease liabilities. So my operating cash flow calculations are going to be lower than the operating cash flow that a company will report. That's just what I do because I want to take into account leases. This is particularly true for retail companies who lease out most of their stores, if not all their stores. It does distort operating cash flow, and I want to have a true indication of how the company is performing in their operations. And in my opinion, lease is operating or day-to-day operating expense. That's just my opinion. Anyway, profit 7.76 million and the operating cash flow 26.5 million. How is there a big difference in those two numbers? So I've gone to note 34, which is found in most statements, this reconciliation of profit after income tax to net cash. So it's not called note 34 in all financial statements, but there is usually, if not always, a reconciliation of profit to operating cash flow. And this is how we get a sense, how we know why there's a difference between profit and operating cash flow. I assume there's going to be depreciation and amortization and possibly some working capital changes. So the first thing is depreciation, $6.8 million of appreciation. So that is a small reason why. There's also share-based payment expense of 1.8 million. But when we get to changes in working capital, this is one of the reasons why there's a big discrepancy. And it's all around increase in contract liabilities, which was 22.3 million. There was also an increase in contract assets, negative $9.1 million. Also an increase in trade and other receivables, negative 2.7 million. But it's all around contract assets and contract liabilities. And that's the main reason there is a difference between profit and operating cash flow. And if we compare it to last year, you can see increase in contract liabilities went from 3.7 million to 22.3 million. So increase in contract liabilities, I assume, and this is a really large assumption, is that's around payment they've received for contracts that they haven't yet fulfilled, which means they have to do the works at a later date, but they've already received the payment for those contracts. One of the other things I wanted to know about Duratec is where they get most of the revenue from, or if the revenue is derived evenly through their different divisions. Then they've broken down their revenue, sort of a disaggregation of their revenue into four distinct segments or divisions: defense, mining, industrial, building and facades, and other segments. And by far, the majority of their revenue is derived in defense. $134.9 million in defense, $74.9 million in mining industrial, $64.7 million in buildings and facades, and $35.5 million in other segments. But if we look at the margins, mining industrial margins is by far the best margined sector or division. And if you actually look at the gross profit of defense, 18.1 million compared to mining industrial gross profit, 18.1 million, very similar. So better margins in mining and industrial, probably similar margins in building and facades, and fairly low margins in other segments. And if we actually compare it to financial year 21, we have seen really good growth in all sectors or segments apart from the other segments, which fell from 44 million to 30.5 million. Defense grew from 98.7 million to 134.9 million. Mining industrial grew from 52.9 million to 74.9 million. And building and facades grew from 39.9 million to 64.7 million. We've also got a description in the notes. So this is found in the notes, a description of each single segment just above this particular table. And so for defense, that's dedicated to delivery of capital facilities, infrastructure, and estate works program projects. Mining industrial is provision of tailored preventative maintenance programs, and building and facades, completion of facade condition assessments and facade restorations. So this is one of the things I really like to look at for all companies. Where does the company get its revenue from? Particularly if a company has a large amount of different segments or divisions. Is there one division they're solely reliant on? And for Duratec, there is not one division or segment they are reliant on. But if they grew mining industrial at a quicker rate than the other segments, I would not be concerned about that, simply because they have higher margins in that particular segment. Another thing I like to look at is a geography breakdown. Is Duratec global? And if not global, where locally do they get most of the revenue from? What state? And by far, it's Western Australia. $133 million of $310 million in West Australia. And just behind West Australia, it's New South Wales, then Queensland, Australian Capital Territory, which is not surprising because that's government, Victoria, Northern Territory, South Australia, and then bringing up the rear is Tasmania. You also can compare from financial year 21 to financial year 23, and we have seen pretty good growth in most states, really apart from two states here. Those states are Victoria, where revenue only grew $100,000, and South Australia, where revenue only grew $200,000, but really good growth in all other states. So this company is not international, not global, but it is national. Now on to the trading update the company did release on the 18th of November 2022, so almost 1 month ago from when I'm recording this video. And I thought revenue or expected revenue was around $400 million, but they expect revenue to be in a range between $420 and $460 million, significantly higher than $310 million of revenue the company reported in financial year 22. The other number they have given us, their guidance they have given us, is EBITDA. I would prefer profit. I would love a company to provide any sort of cash flow forecast, but most companies provide an EBITDA forecast, and they expect EBITDA to be between 32 and 35 million, significantly higher than last year's EBITDA of 19.3 million. They've also included order books. So current order book remains strong at 383 million, tenders of 690 million, and their pipeline comprising tenders and identified opportunities is $1.93 billion. The last thing I want to look at is the chart for Duratec, going all the way back to when they listed on the ASX. And the first day this company was a traded entity, it was a really interesting day because the share price opened at 95 cents and then closed at around about 60 cents. So a fairly significant drop in share price on that one day, and the share price kept on falling. In fact, the share price was in a downtrend from when they listed on the ASX all the way through to November 2021. So that was 1 year as a publicly listed company or traded company. The share price of Duratec fell. And this is one of the reasons why I don't like to buy into IPOs until they release at least their first financial results. So that means 6 months, or the company releases a trading or profit upgrade. That's the only time I will buy into an IPO, if they release a profit upgrade. And one of the reasons behind that is when a company IPOs, most of the hype, not all of it, but most of the hype is confined to at least the first month, if not the first few days of trading. And then that hype dies away, and a lot of times you will see the share price drop. If you see the share price rally after that first month, that's actually a really good sign that there's strength in the company. So the share price reached a low of 30 cents back in November 2021, so just over 1 year ago. And there was signs the share price was starting to turn. That was a low. The next low, which was in March 2022, was a little bit higher than that 30 cents. And then the next low in June 2022 was a little bit higher than the March low. So each successive low was higher than the previous one. So that's the first sign that the trend was starting to shift. But I needed more signs. I needed a higher high. And we got that higher high late in August of this year, when the share price rallied to just above 45 cents. And the share price fell away. But then that low was higher than the previous low. So we are now getting signs of a developing uptrend. Higher highs, higher lows, and this uptrend has kept on going over the past 4 months. Share price has reached a recent high of around about 59 cents, which was reached about 1 month ago. So the share price of Duratec is now in an uptrend. There is positive sentiment behind this company. The company released a really good trading update, and if those numbers are confirmed when they do show their financial year 23 results in August, or they reconfirm those numbers, there is potential that the market will become more and more interested in this company. And if the company releases a profit upgrade, that sort of thing, I think there is potential the share price of this company will absolutely take off. That's all I have for Duratec. My first look at this company, only been on the ASX for about 2 years. The share price has gone through the wars and has now, or is showing signs of recovering back up to those highs we saw on the very first day of trading. Share price reached about 90 cents. We have seen the share price reach as high as 60 cents recently. So it does look like there's now positive sentiment behind this company. Share price is in an uptrend. So things are going well for this company in terms of its business and also in terms of its chart. If you have any questions about Duratec, if you have any further insights about this company, I'd love to hear it, particularly if you disagree with anything I've said in this video. So leave those thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.